GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, it was not a good week for the euro. The euro fell to 16-month lows against the US dollar, so that euro-dollar pair really tanking at the moment, making for great trend trading conditions for the trend followers out there. Also, pretty terrible week for Bitcoin. It was good for us. We talked about that bearish divergence in last week's video, and that played out perfectly. Might still have some more room to go. There was a big bearish weekly candlestick, which I'll talk about as well. Otherwise, record high in the S&P 500, but otherwise it's going flat. I'll talk about all of this and more. If you have any questions, then obviously drop a comment in the video. We really like that. And otherwise, if you're enjoying the video and getting some benefit, please remember to click that like button. Give us a thumbs up. Okay, so let's have a look at the euro-dollar currency pair that I was talking about up front there. This is our daily candlestick chart, and you can see a very bearish formation. The short-term moving average pretty consistently below the longer-term moving average, and only a brief period with a larger correction back in July. But otherwise, it's been pretty much a downhill slope since May this year. And now we've actually dropped below the 61.8% level. If you remember that I was talking about last week, I talked about the two different places that you could draw it. It's dropped well below this first, where you could argue the uptrend basically began from that low, whereas the downtrend finished at that low. So we've dropped, and that was kind of coinciding with these two peaks here. And then this was also the kind of significant area of former resistance, which could have acted as support. But actually, as I said, the price tanked through both, tanked through the 61.8. And even if we do draw our Fibonacci a little bit lower there, you can see that we have closed the week under that 61.8. These are always zones. They're not precise, but it's we closed near the lows of the week. And below that 61.8, we've just dropped into weekly oversold territory. So potentially room for a bounce, but I think it's a little bit early days to call that just yet. Very much a bearish looking market. So if I remove those fibos for now, you can kind of see we're back to our daily chart. And then actually having drawn that, we talked about how the price just tanked. I mean, it did try to find a little bit of support there, but pretty much tanked straight through that major form of resistance, potential support. But interestingly, got the bounce off 113 and nibbed it pretty nicely to roll over again. And so we're potentially trying to find a base here. You can see there's a couple of long candlesticks, and we're sort of attempting potentially a double bottom here, but in my book, this would be a counter trend trade and kind of low probability to be buying at this point. I don't think there's too much particular reason to think that we'd be bottoming here. Just potentially that the 113, which we're just below, and the 61.8, which we're also just below. Potentially those two together, price can snap back higher. If it does, we've got that same area of resistance above, and then where we saw that last, where the price really did start to tank, those lows that where the price really fell through a cliff, those lows should be a decent supply area. Should we get a decent bounce in the price up there, but that would be 100 plus pip move, and certainly be counter trend at the moment. But as I say, it's been a very strong downtrend, so the timing would make sense for at least you're not betting on the trend reversing necessarily, but you are maybe making an expectation that the price will move up through the 50 period moving average and come up and challenge the 120, which is obviously the 20-day moving average. So there we have it. Let's move on to the British pound. As I say, we're not plunging new depths like the euro, but obviously there has been general dollar strength. Inflation higher than expected in the US, strong US retail sales as well. So quite a few things supporting the US dollar. Obviously, the Fed are just beginning tapering. So generally, it's been a story of dollar strength. And but the pound has been a relative outperformer versus the euro. just because actually the Bank of England are potentially looking at a rate hike, even though they skipped it last time, potentially it's going to happen at the next meeting. And I think I mentioned the same thing last week, but that's just why we're not seeing the pound pressing into 16-month lows. We're sort of seeing it, come down when there is dollar strength, but kind of holding it together at 134 as a base. Still very much a bearish looking configuration, but it actually has done that, what I was talking about, the push above the 50 period moving average on the 4-hour chart, but it has dropped back through it. And so, again, still probably a more of a bearish situation than bullish. If we do get another decent pop in the price, these lows through here, and then the price eventually tanked right through them, I would have thought that would be a strong area of a strong supply zone. And it also, at the moment at least, it coincides with the 20-day moving average. So if we do get a pop in price, we're still in a kind of generally bearish configuration, just a slightly stronger correction at the moment. So that could be an opportunity to jump back in on the downside at higher prices. Let's move on to dollar yen. This chart, as I've got it right now, looks a bit messy. Let me just bring you out to the daily chart. This is what I thought was a bit more interesting. So on those other pairs, we were talking about, maybe there's an opportunity to, maybe the price does bounce a bit, but the trend is still down. So I'm not sure if we really want to be necessarily going counter trend. I think in dollar yen, we've got a bit more reason here to go counter trend because of this bearish divergence. So we made a new high, challenged 115. So it's hit a big, not even just a round figure, but one of the we talk about 110, 105, 115. Those halfway round figures, one level up, are significant, and that's where big flows of money tend to happen around those big levels. And we have reversed from there, and we've done it with a bearish divergence, and we actually put in a just about a bearish engulfing candlestick pattern, also kind of two lines pattern, but it's bearish. And then you can see here that this line that I've drawn through here again is that major long-term resistance, which is another reason to be a bit more confidently bearish. It's these highs through here, long-term resistance going back to 2019. The price is struggling here, and I had said before, maybe it would make sense to just literally trade the top of this line down to these former highs, and that potentially is still on because we're pretty much close to the top, still close to this line, and you can see that we've been struggling at that same resistance line. And then if we come down to our 4-hour chart, we can see there's the big sell-off there. And then where the price really tanked, it's kind of come back to that, and it's stalled again. This is the long-term line, and it's stalling there. And then this was another kind of interim line, and it looks like the price is stalling at that and potentially rolling over. So big leg lower from a major resistance area, potentially another trade to the downside coming up. I wouldn't say this. Okay, this is a situation where you want to pay less attention to the moving averages because, the shorter term moving average is above the longer term one, but the longer term one's flat. And so actually the short one kind of goes below it, goes above it, goes below it, because the longer term one is just flat. And that's characteristic of range trading conditions. And so it's not a bad thing to be selling the top of the range. Now, we're not quite selling the top of the range here. It's not quite a range because we did make a new high. But as I said, we had bearish divergence. And this sort of, if we consider this a false breakout, these highs here are kind of the top of the range that we've been dealing with. So a bit of a complicated situation with dollar yen. I think if you did want to take a dollar short position, this would probably be one of the more interesting opportunities, and the others more like waiting for the next time to go long the dollar, i.e. short the euro, short the pound. Now gold, I'd mentioned last week that I think it's teeing up a deeper correction. That does seem to be the case. It's dropped down through the short-term moving average, and it's kind of dropped out of a bit of a kind of flag it was in. Not even a flag, but a kind of a channel. that was kind of the similar top line going through there. It's broken down from it. It's challenging this kind of lows here. I've just drawn a bit of a kind of it's not a proper demand area, but it's sort of where two lows. It's kind of a zone of support, and then if we go further through here, this is a potentially interesting area. This with gold is never this textbook. Gold always plays a bit of silly games in my experience. So I'd be surprised if we got a very neat bounce off these old highs. Probably gold would drop a bit further in one place. Either it just doesn't get to it or it will drop through it. Even though the line might generally be working, it will play a little bit around it. Is generally how gold seems to just always go too far in one way. So if it were to do that, when we got this big acceleration higher, that started down here, and that coincides with the 20-day moving average. And maybe a little test of the 20-day moving average, that would be around 1820, potentially an interesting demand area if the price does continue to drop. Now, I wouldn't be surprised to see it go lower, but still, while we're in this bullish configuration, and that's a pretty interesting area after that big acceleration. I think that could be could be an opportunity, that area. And just look at this RSI. Lastly, you can see that it was a while ago that we hit oversold, and we've just, even as we've been kind of drifting sideways, we've just been kind of drifting lower in RSI, but we've not gone oversold. And the last thing we did was overbought. So we're just coming off overbought conditions, potentially just waiting for the to come, out of overbought conditions enough to attract people to buy in again. Silver, this chart looks a bit messy. Let's pull out a little bit here just to give you the context. We've been talking about this change to an uptrend for a while in silver. We talked about this resistance that we'd broken through. It wasn't the most confident bounce from that resistance turning support, and so we are actually down below that resistance at the moment. Not such a surprise after a decent move higher, that a slightly larger correction. And now it sort of seems how on the daily chart you could sort of see this line that I've drawn through here. It's almost like this. It's like the demand area for the daily chart. And so I've actually got it a bit more neatly lower down, but actually then you can see on the 4-hour chart, you could see it was a peak, tested in that big acceleration move, the similar one to gold, and it's come back and bounced off that pretty neatly. Now it could come lower again, and I think what I just had pointed out was where that move really originated. Similar idea with gold, and it's also the 20-day moving average as well. So this to me looks corrective. Looks like we had a decent pop high. We went through the resistance. Now we're just kind of, it's basically that. It's basically just consolidating in a sort of channel-ish. And so we could either wait for a pop through the top of the channel, pop through 25. It will be higher prices, but a bit more confirmation. Or we wait for a deeper dip into this demand area, and potentially somewhere above 24 could offer an opportunity. So still thinking with a bullish mindset in gold and silver. But obviously we've got to be ready to change that if this pullback goes too far and the moving averages start pointing lower. Switching gears to oil. So this is just a fully fledged downtrend now. It's interesting. The uptrend's over. We've got to think differently about oil at the moment. It's down, I think it was 7-week lows potentially. But basically from a price standpoint, it hit 85 or almost. And we've come down $10 to 75. Now that's a pretty natural stalling point. And I talked about last week this old high as a kind of pivot zone and a potential area of support. It dropped through that support, but then it has bounced neatly off 75. And these lines are what I'd drawn in last week. And I basically said along the lines, if we hit 85, we've dropped through 80. That suggests we could be on the way to 75. So we've now hit 75. The trend is bearish. But if we are going to bounce, then obviously this, it's this this old low through here. It's done that MT4 classic thing of bouncing up. But you can see what I'm doing. That's the support. It's 75. So there's a few reasons to think maybe a bottom's in. We've come off $10 in oil. Some people are good. Even if the trend hasn't reversed, there's room for a pop here in oil. So on a shorter term basis, you can kind of see what's going on here. That obviously the trend is down. This is our long-term support that we did actually drop through. If we get up above that, come back, test it, that could be interesting, and that would show that the very short-term momentum's turned positive. And then if we're just thinking about areas to sell into this downtrend again, well, this to me is kind of like this low here / this one. Come on, let's align. / this. So it's between here and why can't I drag that down? But you see my point. It's kind of a zone between this low and this low, and then if we're going right back up to the start of this sell-off, that's the kind of interesting supply area up there, and it's also the 50-period moving average on the 4-hour chart, which has been holding together this trend quite neatly. So if we do get a bounce off the 75 level, as I suspect maybe we will, then these are areas to potentially rejoin the downtrend. S&P 500, as I mentioned, we did hit record highs last week, but only just an intraday one, I believe. It's kind of sideways under the record high we made in late October, early November. But potentially an interesting situation here where this first high was very much in overbought conditions. These last ones have not even quite nudged into overbought. They've been drifting around underneath 70. So potentially, not much confirmation as far as price, but potentially some bearish divergence if you're trying to pick the top. More likely that the price does just break through 470. That's kind of stalling at 4,700 at the moment, and we just push up towards 4,800. Notably, Goldman Sachs have a target of 5,100 for 2022 on the S&P 500 for what that's worth. But obviously, it's for now, it's a bullish market. We've got a bit of potential divergence in there. If we do have a sort of a big sell-off day that maybe takes out, if it kind of engulfs maybe the previous 4 or 5 days, then actually that could get interesting as kind of a confirmation of a bearish setup. So let's look out for that possibility, but otherwise be minded to be generally bullish. Now, last but not least, let's have a look at Bitcoin. So I wanted to have a look at this weekly chart because I think this is really instructive. This is the former record high from the start of the year, and this is what we've been doing around that record high. And I remember it was interesting, I saw in an interview Jeffrey Gundlach, the so-called bond king, and he said this double top looks really bad in Bitcoin, and he's prone to over-embellishing what he's saying, and that was when the price had just first tested it. But now, a few weeks later, that's really starting to look to be the case, especially after last week, because we had the two long-wicked candlestick patterns that failed to break out above the former high, and now we've had the follow-through to the downside, which was a big bearish engulfing candlestick, which took out 1, 2, 3, 4 previous weeks. So things looking now a bit dodgy on Bitcoin. And just look at this RSI. Look how long the price was overbought during these last peak. And just look at the price now. It's well below overbought conditions. It's not even characteristic of a bullish market at the moment because we're just so far out of overbought conditions. Now, bulls will say, well, we're not overbought yet. So that means there's more room to the upside. And that obviously there might end up being a resumption to the upside. That's entirely possible. I mean, we saw a similar bearish engulfing candlestick down here. But a couple of weeks later, we're already zooming to the top side. So something like that could happen. Maybe the price just dips down to this former high again, finds some support, and rallies up. Now that's entirely a possibility, but still, from the short-term perspective, that's still a little bit lower than we are now. You can see that we're bouncing off the 50-day moving average, and then we're potentially heading towards I would say this as a kind of cluster of kind of resistance in this same kind of zone that it kind of spreads across here as well. This would be an interesting area if the price could manage to get that high. But you can see the bounce that we've got so far over the weekend. We gapped up and then closed down. So this candlestick on the 4-hour chart is pretty ugly as well, because you can see how does a black candle follow a long black candle like that, how does that follow and be higher than this previous black candle, right? So it gapped up and then just immediately filled the gap in the same 4-hour period. And that's pretty bearish. So we might not get even up to this area. You can see sort of what we're doing from a basically what we've kind of done is we came up and tested the old low, and then we gapped up above it, and then we gapped back low on it. So maybe we're done, and maybe the Bitcoin price is just rolling over again. We're oversold, and you can see the moving averages have turned negative. So I think there's maybe a bit more downside here in Bitcoin. We're currently sitting around 57,300, and I'm talking about that next old high being down at basically 52,000. And so if we did come down to 52,000, that would be dropping from 69,000 down to 52. So that would be a sizable decline at that point. Potentially we're done, but I suspect based on this weekly chart that actually we could be looking at a test of this high and then potentially even a drop down to this support and even these lows down here back at 28,000. This looks pretty bad to me. This looks like a false breakout to the upside, and it's turned back into range trading conditions, which would imply a drop down to 28,000. But I don't think we have to do that all at once. I think first target to the downside is the old high, then the low, then those lows. All right. Thank you very much for watching. I'm going to leave it there. Have a great week trading, and see you at the same time next week.